So, you want to be a real estate investor, but where do you start? How do you know what information and sources to trust? That's where I come in. I'm Jonny Catani, and this is the Investor Relations Real Estate Podcast. Hey guys, real quick, before we start, go to investwithcatani.com and download my free ebook, Is Commercial Real Estate Recession Proof? Now to today's show. What's up, guys, and welcome to another episode of the Investor Relations Real Estate Podcast. I'm your host, Jonny Catani, and I am joined today by Luke Leins. Luke
Jonny,
oversees... Doing well, man. Thank you. I'm going to introduce you real quick.
Sure.
Luke oversees third-party management, growth, and expansion for ResProp Management in the Florida market. Luke's background includes development, acquisitions, private equity raising, and third-party management. Luke's strategic approach is to partner with ownership groups looking to develop multifamily portfolios by assisting with deal sourcing, underwriting, capital planning, and market research. He also works on strategic management changes to maximize property values for owners. Luke holds a bachelor's from Colorado State University and is a certified commercial investment member, CCIM, and accredited investment fiduciary, AIF. Luke, welcome.
How you doing, man?
I'm great. Thanks so much. It's great to have you. I love organic intros for this exact reason. Cool. Well, I didn't realize, we'll get into these sweet letters you have behind your name here. But take us back to the beginning. You got all these from graduated from Colorado State. Did you jump right into real estate? Kind of take us back to the beginning and to where you are now.
Yeah. So no, I did not, and I made a bit of a mistake out of college. So I graduated early when I was 20 years old.
Wow,
and
that's no easy feat from Colorado State. Isn't that still like top 5 party schools?
That's right. So I graduated early, and at 20 years old, coming on 21, I was like, the pinnacle of my life is if I can make $100,000, I'll be living it up. Which, like, for a young kid, it's like, sure. So that was like my aspiration. I didn't really care how I did it. I just wanted to go make $100,000. And so I ended up in Dallas, Texas, wholesaling life and disability insurance to corporations. Totally random industry, lots of money in the business. Started doing that. And after like a year, I was like, what am I doing? This is not that fun. So I moved back to Denver and got more into the medical insurance side. Still wasn't terribly fun. And then by this time, I'm like 24, 25. And I was like, I think I'm smart. And so I actually opened up a brokerage, an RIA. So we were handling investor money, institutional money from companies, and handling retirement plans, benefit plans for businesses. So started Destination Investment Strategies in 2015, 16. Did that for a couple of years, and I was building this business. I was doing well in my mid-20s. And what happened was we started raising money for private finance mortgages for villas in Mexico. You can't take out a traditional mortgage in Mexico. So we were actually private placement funding mortgages in Mexico. That trickled into private funding spec villas in Cabo. And we all seemed to enjoy the real estate more than we were enjoying the equity markets. I actually read a blog post of yours from a couple of weeks ago when you were talking about, I'm done with equities. So that kind of happened in my professional life. I was like, equity trading and managing money, it kind of is what it is. And the real estate was so fascinating. So I actually left my business after a couple of years, sold my book of business, and I went to work for a high net worth owner developer of senior living facilities. So we had long-term care, and we were developing age-in-place independent living, assisted living, and memory care facilities around Catholic churches in mature markets in Ohio and North Texas. So that was kind of what brought me into real estate, was doing that, and it was a ton of fun. And then market rates started calling, and so I went to work for, at the time, it was Alliance Residential Fee Management Department of Alliance. At the time, we had, I think, 110,000 units, grew from 110 to about 150, and then heard from ResProp, and they were building something wholly unique in real estate. So the background on ResProp is we were formerly called Avesta. We were founded in 2010. Our founder went to Harvard Law, went up to New York in the middle of the recession and somehow raised $100 million in New York, moved down to Tampa, Florida, and started buying up properties, mostly bank-owned properties at that time, 2010, 11. Raised 3 funds, about $500 million, deployed it into about $2 billion of real estate from 2010 through our final fund closed in spring of 2019. And toward the tail end of the fund, the company got kind of tired of traditional investing. And our founder, who's a brilliant guy, his name's Peter Rex. He's always worth a LinkedIn follow. He as an owner and a head of a private equity company, he was seeing a lot of shortcomings in technology in real estate and how properties were being operated. So instead of looking for solutions, he said, I'll do it myself. So we've pivoted from being a large private equity company to we have our fee management platform, and we're launching in-house. I think we're launching about 12 different prop tech companies. So we're self-funding a number of technologies that we think are going to help us as an owner and an operator, and eventually we'll hopefully be pushing those out to everyone else. So I heard what they had to say over here, and my 3-year at the company was last week.
Nice. Congrats.
Yeah, thank you.
And you mentioned, off camera, you live in Florida now, but had been working in that market for all 3 of these years you've been in the Florida market.
Yeah, so we operate in Florida and Texas, and we have just in the last 2 months pushed into the Carolinas.
Nice.
So I was living in Denver. I got married in October. So I was living in Denver, and I had a girlfriend at the time, and she was stuck in Denver. And so I was essentially commuting from Denver to Florida for 2.5 years.
Yikes.
So I was like
That's
the world's youngest snowbird, which is great. I had an apartment down here. We had the place back in Denver. And so once we got married, it was like, hey, nothing holding us back. Let's go enjoy Florida. It's been great.
Nice. World's youngest snowbird. I love that. That's awesome. Yeah. I mean, hey, listen, there's something to that for sure. So, awesome. Well, that's a great intro. I appreciate that story. You've touched everything. So you kind of know the ins and outs of it all. Sounds like you found the thing that you like the most. So, first I want to touch on these, letters. What did you have to go through? Just kind of give us Reader's Digest, what it looks like getting these, certifications. And then I want to get to the technology.
Oh, okay. Yeah. So the AIF certification is actually from my days in the finance world. So that's essentially an accreditation saying I am going to act as a fiduciary on behalf of clients. Now, it holds a lot of weight in the equities world. In real estate, I hung on to it because in real estate, we still act as fiduciaries, right? You're a fiduciary to your investors. We have a fiduciary responsibility to our owners, to our own investors. So I like hanging on to that one because acting as a fiduciary, meaning you're required to act in the best interest of your client. That just goes a long way with me. So that's a holdover from my days in the finance world.
Love
then
that.
the CCIM it's a really great program. If anybody's new to real estate, it's just a really great real estate certification. It's relatively challenging. I want to say it's a year or two. It's probably most similar to the CFP in the financial management world. So yeah, you're going through how to underwrite developments, how to underwrite acquisitions. Your discounted cash flow models are in there. Market research is part of the program. So really, it's a way to legitimize yourself in the real estate business. A lot of brokers have their CCIMs to say, listen, I understand the investment side of this business. As a predominantly a fee manager, we want our clients to understand, A, we're owners right now, B, we've owned 20 some odd thousand units over the last 6 years, and C, our whole team top to bottom really understands the investment, really can speak the language that our clients speak. And it's gone a long way. We spend a lot of time underwriting and sourcing deals. And it's just gone a long way for us. So yeah, anybody who's new to the business, I think it costs about $10,000, but there's certainly a lot of value in checking it out.
Wow. That's awesome. I love that. And that's great. You did that. Like you said, just kind of build that credibility, which is huge in this space, right? Because again, we're acting as fiduciaries and we want investors to know that we actually know what we're talking about.
Exactly.
Which can be hard sometimes for sure. So, especially when it comes to the underwriting, I know that that's certainly a challenge for a lot of people. And working on a development deal now and tried to understand development underwriting, and holy cow, that was just so far over my head. So that would be nice to like really get a detailed education on that. Awesome. Well, that was purely just for my own selfish knowledge. I was very curious, but I'm sure the listeners got some value as well, especially for the CCIM. So you talked about how the managing principal or head of your funds are of ResProp found some shortfalls, some shortcomings in technology. So kind of talk about what those are, and if you can, I don't know if they're proprietary or just kind of the solutions you guys are developing.
Sure. So yeah, we have an overview of all the companies on our website, rex.com, just rex.com. But yeah, generally the more holistic approach is really twofold. One, we want to be as efficient as we can with the staff we have on properties, and two, we want to bring in the sharing economy. So if you look on the maintenance side, right, you've got unit turns being done, you've got your maintenance team on site. Part of what we want to do is really make sure our W-2 labor is maximized and start supplementing that W-2 labor with good 1099 sole proprietors. What we run into, a lot of these guys don't know how to get insurance. They don't know how to get their business set up. So we built a couple companies to help those guys get up and running, which is a win-win for everyone. And then we're also looking at building like a unit turn Uber for unit turns. So you look at your unit that you have to have turned, you punch in, we need a trash out, paint, resurface, carpet replacements, and a punch. And it actually gets vetted out to these vendors. And should ultimately cut down downtime on your turns, as well as create an efficiency in what you're paying for that, since it's going out to an active market. So that's a couple. We do have live a tokenized real estate platform. So we are buying some small deals. So we are actually tokenizing some of our own deals. So that's launching here right now, actually. Oh, we have like 8 others, and I can't even remember what they are. But we're kind of hitting it from all sides right now. Is whatever we think. Hey, I wish this existed in real estate, or I wish this existed better. Instead of looking for someone to do it, we're just building it in-house.
I love it. And this isn't classified, right? You don't have to kill me now.
No, we're good.
Okay, good.
No, it's all on the website. Yeah.
I'm kidding. Awesome. Wow. That turnover one is fascinating. And and maybe there are other people working on it and not talking about it. I'm slightly amazed that it's taken. You ever like see technology that comes out and you're like, why didn't that come out like 3 years ago? You know, that's one of those things where I'm like, wow, yeah, that makes so much sense. That absolutely should be technology. And then this tokenization, I'm very fascinated by it. I'm not sure how, do you have a pretty good understanding of this whole process? I'm just starting to learn it.
Somewhat.
Okay.
Somewhat, yeah.
It is a fascinating, essentially what can you kind of explain it from a high level for people?
Yeah. So we're actually taking a section of the stack and when we're creating a coin, right? A crypto coin out of it. And so that allows for more liquidity in real estate. So you can actually buy and trade these coins, these fractional ownership shares on essentially a crypto market.
Fascinating. Which I know is certainly, I mean, listen, I'm very biased. I love real estate. I know you do as well. And it's kind of interesting, and maybe you can speak on this, because on one hand, one of the things that is nice about real estate is the asset protection that's available, right? Because it's so illiquid, typically, it almost adds a organic layer of asset protection, just because, you know, you can't just, your LP shares, you can't just go sell on an open market. Whereas this tokenization will kind of maybe bridge that gap. But at the same time, that's also kind of the con, is it's not as liquid. And I know people would probably be more on board with it if it wasn't liquid. So have you guys looked or discussed kind of the asset protection of this and kind of taking away that piece?
To a degree, I'm not terribly familiar with it, but I don't know that there's a major issue, right? Like the value of the token is relatively protected. It's just a transaction value that increases. So I don't think there's the terrible actual value change to that. it creates an open market, right? It creates efficiency.
Agreed. Yeah, that's a really great perspective. I didn't look at it from that. Awesome. Well, that's incredible. I love that, and I know that technology, again, it's amazing and also can get in the way. But anytime that you can automate something and make it more efficient, especially in this space, that's huge. Especially as we're seeing cap rates compress, even 0.5% off your expenses, can be significant potentially. So anywhere you can find that edge is huge. So as you guys move forward, are you going to start unwinding this portfolio and focus more on the technology?
So our own portfolio.
Yes.
Yeah, so we were, I believe we were the largest net seller in Florida in 2019. I don't know for sure, but I think we still own about 3,000 multifamily units, down from, I think our peak at one time was 18,000, and call it 2017, 2018. So yeah, I mean, we've divested. We still have the deal shop. We're still actively owning and managing our legacy assets, and then a lot of them won't go away. We'll hang on to them forever. But yeah, we're not really any intention to raise another fund in multifamily. We're really focused on the scale of fee management, the innovation that we're pushing into fee management, and the tech applications.
So explain this fee management. I guess I'm not as familiar with it as I thought when you initially brought it up.
Yeah, I mean third party management, right? So managing deals on behalf of other equity groups, right?
Got it. Okay. What I thought, but also I don't think I've ever heard it called that before.
For third party management.
Got it. Okay. Fee man. Okay. Yeah, that makes perfect sense. Cool. So now talk about then, kind of what your day-to-day looks like as you continue to grow with the company, and where you see things moving forward for you guys.
Yeah. So we have a great set of clients we're already working with. That's always growing, expanding. We are largely referral based right now. We've gone from about 1,000 to over 10,000 third-party units in the last 2 years. So we're growing very quickly. So the day-to-day at this point is really the bottleneck for us and for everyone is deals, right? So it's getting people over the finish line. In third-party fee management, 90% of our growth happens when our clients are growing at acquisition. There's not a whole lot that happens mid-hold period, because it's a pain to unwind one group and put another in. So the only time that really happens is when things are going very poorly and the market's been bailing everyone out for the last few years. So not a lot of that. So really we grow when our clients are awarded deals. So what that means for us is we want to help people to source and underwrite and acquire good real estate, right? Markets that we like. We're always looking for a lot of leverage. So generally our day-to-day is keeping a tab on everything that's out there in Texas and Florida and the Carolinas. We actually put out a deal map every week for all three of those markets that shows every actively listed deal in that market with a link to the broker's landing page. So if you're looking in Florida or in Texas, you just jump into our map. It's got real-time listings from every broker, and you can just click in and say, hey, I really like Frisco, Texas. You can jump into the map and see that there are 7 deals on the market in Frisco, Texas right now. So that's been a huge tool. So we're trying to be creative in what we're doing, right? And then a lot of underwriting, right? We're always looking for markets that we like. There's a reason we're in Florida, Texas, and the Carolinas, right? From a macro level, it's hard to beat those states,
right?
And then we're getting a little more granular, right? So a lot of the groups we work with, a lot of syndicators, a lot of guys with more of a finance background who haven't worked on property or who aren't terribly familiar with the P&L. So when we underwrite, we're underwriting kind of ground up instead of kind of top down. So we're able to identify some other levers or find mismatches in the expenses or in the revenues to just find as much money as we can, find as much reasonable money as we can. And ultimately we're giving the thumbs up and down on a lot of deals for a lot of our clients. So when our client gets onto a deal, we've already vetted it. We like the deal. We have 4 different reasons we like it. So that's the majority of our time is underwriting deals with groups.
Wow. Yeah. I mean, and that's, from talking to experienced operators and someone who's also out looking for deals, right? That's everything right now. So you mentioned finding maybe some levers that aren't so obvious to some of those out there. So kind of talk about what those are and what you're seeing in the current economy in terms of, underwriting and different things like that.
Yeah, have you heard the value of a dollar pitch in real estate?
Maybe.
So
What is
so
it?
it takes so $1 difference in rents, right? We're asking one additional dollar in rents times however many units times 12 months, and then you're looking at that dollar on a cap rate exit. So you're multiplying that by at a 4 cap 25. So the value of a dollar is actually like $1,000. So those little levers have a huge impact. So a lot of what we're looking at is ancillary income programs, recapture. Like things we're seeing, like valet trash is rolling out everywhere, right? You're spending $9, you're making 25. No one really dislikes it. It's a value add service. So that's relatively penetrated at this point. Things like bulk cable, um, not cable. Cable doesn't exist anymore. Bulk internet.
Right.
So it used to be the bulk cable internet. Actually, Utah has a lot of the bulk cable internet where you pay $80 and you get cable and internet, but no one uses internet. So same thing, only it's bulk internet. So I want to say the property pays like $40 and you're charging your residents $55 and they're thanking you because they don't have to set up their own internet service. So there's a huge margin on that. The margin on that is actually about the same as valet. So just rolling out programs like that. And then we have access to a lot of information that investors, particularly who don't have large portfolios, have. Since we have a portfolio, we can expense comp, we can comp reimbursements. There's a lot of things that we can comp based on the information that we have that others can't. So we're running through all that, and generally we're able to find, it's a couple $100,000 here and there, but on a 4 or 5 cap exit, it's a huge number.
Wow, that's fascinating. Yeah, the trash valet for sure, certainly, and I'm sure Class B, Class A, that's like almost. I know my friends that live in Class A. That's just almost like they don't even think twice about it, right? That's just part of it. Like, yes, I'm going to pay for trash valet, or they know it's there. And the bulk internet thing is a fascinating space to me because if I understand correctly, I've had a guest on who does just that. Even the cable companies are paying sometimes upfront to the operators. Is that true, to sort of like be the sole provider?
Yeah, so that's the exclusive marketing agreement. So yeah, so you get on a site, and if it's not in place, you can say, okay, I'm not going to name any groups, but okay, cable or internet company, you're our exclusive provider. People are going to set up through you, and yeah, they'll pay a big nut up front, and then a monthly or quarterly recurring fee. Those are actually going away. So there's actually legislation right now that's going to eliminate those. I believe you can now have a preferred provider, but you cannot have exclusive monopoly on your property. So those are actually going to go away. So the penetration on multifamily of the bulk internet is very, very low, but you're going to see a huge shift to that. And there's not a ton of downside, right? If somebody says, like we're talking like a gig of internet, like incredibly smoking fast internet,
Right.
where only like Ninja streaming on Twitch might need a little more than that, but your average anybody, it's more than enough. No setup or anything. So nobody really blinks at it, right?
Right.
We want everyone to have access to internet. It's pretty cheap. But penetration is really low. So you're not going to see that on virtually any deal you underwrite. And you're building in A, residents are going to like it. And B, you're building in essentially $15 a unit a month of ancillary net revenue. And
Wow.
things like that, I think that's probably going to be 60% penetrated in 2 years. But right now, it's something that you can work into your underwriting. Just generally for the investors out there, you can work in on average $40 a unit expense, $55 a unit revenue. Obviously, ramping up in that first year, and then they help you with that ramp up the same way valet trash helps you with that ramp up. So you can start underwriting that today, knowing that it exists across the country, and just start finding ancillary revenue that is going to be accepted.
Wow, that's fascinating. I love how legislation is jumping in now after they've allowed these cable companies to become absolute conglomerates. And they're like, oh yeah, but you know what? You can't be the sole provider for multifamily in this market after there's only like 3 left in the entire country.
And they're like, wait, we're the only internet provider in the state. Like, no one else is here.
Fascinating. Wow, that's awesome. Okay, so very interesting. And that's I assume this is market by market, but these top markets, it has to be like you mentioned, it's really starting to become a lever that a lot of people are pulling.
Yeah, I don't think it doesn't exist anywhere. I mean, outside of like rural areas, like I don't think it doesn't exist anywhere. No one's underwriting it. I'm not even underwriting it a lot of time. But yeah, it's just one of those no-brainers. The same as valet trash. 2 years ago, you're like, oh wait, I can underwrite an extra $15 per unit of ancillary revenue. No-brainer. Same thing with that bulk internet, and there's a million of them, right? But we're always trying to figure out what that is, right? So yeah, again, like we try to be that resource. We're not in all markets. There's a bunch of great companies here in Florida and Texas and Carolinas. And anybody who's, particularly those who are new to investing, talk to management companies constantly. Make sure they're underwriting, looking at your underwriting, and always just be asking, hey, what's new, right? Like what can I be adding to this deal? And ask that to 3-4 different management groups, and one of them is going to have a better answer than the other 3, right? And you can start working with them. But yeah, the resource in real estate that is property managers, which is like the least sexy thing in real estate, but also probably the most important factor in how well your deal does. It's the craziest thing because no one wants to deal with property management. We've got guys who will call. They're like, hey, we're halfway through our DD window. We're taking over in 45 days. Do you want to come manage our property? And honestly, I'm always like, probably not, because we didn't set expectations with you. And you probably just tossed a bunch of random numbers into a model and won the deal, right? There's always a less informed guy that you're bidding against. And those guys are winning a lot of deals right now. And they get snookered because they haven't talked to anybody who operates in that market, who knows that market. You can say, no, you can't get payroll for $900 anymore. No, you can't, be charging all this stuff. So yeah, I mean, the property manager is a resource for anybody who's, particularly those who are new, is huge.
That's really, really great insight. And I talked to a lot of either asset managers or, even had property managers, and it is like the least sexy part, but it's like this so important. Like everybody, you see on LinkedIn and social media all over, like, oh, new acquisition. And listen, of course, that's great, especially in this market, right? Whenever you can get an acquisition, assuming your underwriting was actually conservative and the deal really does work, which, you give everyone the benefit of the doubt. But what nobody talks about after that is that, okay, now you got to go implement a business strategy. And you need to make sure you have a property manager, if it's not in-house, that can also implement that. And one thing I know from talking to operators is when you can find a property manager that also has their own portfolio, even as specific as being in that same market, it's even better because then they understand it from your side as well and not just purely the property management standpoint.
Yeah, and I would say most property management companies have a deal shop too, and a lot have a development shop. The deal shops are actually quieter. They don't talk about it because it creates an inherent conflict of interest. Our deal shop is turned off, but we can be at the table and say, hey, we had a portfolio of $2 billion of real estate that averaged like a 35 IRR over 9 years. We've been where you've been, right? Like we understand. Here's what we would do from the management side, and here's what we would do from the ownership side. And typically those meet in reality, right?
Right. And one thing I'm sure you even mentioned, you're like, oh, if someone calls you 45 days, haven't been able to set that expectation. I think you kind of alluded to it earlier. You kind of been able to, as I say, trip and fall and 2x your deal in the last 3 to 5 years, and you've been able to get away with probably poor underwriting. Are you guys doing anything to, I know you're doing your own underwriting, and by the time you get a deal to someone, it's been underwritten correctly, but is that something that you're paying attention to in terms of potentially distressed assets coming onto the market at some point because some of this underwriting is done so poorly?
Yeah, the market is still strong. But yeah, I'll say internally we're keeping tabs on CMBS loans, which might create some opportunity. We saw it in the hospitality space, right? The COVID created a lot of opportunity. There are more hotel conversions entering business plan right now than ever. So we saw it in hospitality, and will we run into it in multi? Honestly, I don't know. It's such a strong asset class right now. Nothing is really except for interest rate expansion. Nothing is really um, jumping out. But I'll say there are guys who will probably have trouble on a refi that took out bridge, and CMBS loans we are tracking a bit. But right now everything's pretty sunny.
Yeah, no, that's super fair. I was just mostly just genuine curiosity, just, kind of just talking to people again, different debt stacks and things that could potentially, put them in some hot water. One thing I want to touch on as we kind of wind down here, a lot of people are seeing compressed cap rates, yet things are still very strong. Talk about why that is, why they're not mutually exclusive, cap rates and the market as a whole.
Oh, interesting. Yeah, so I guess at least from our viewpoint, what we've been seeing is right, like what's fixed rate today, like 4.8, up from 3 in a matter of a few months. So cap rates were sitting in the low threes really in the fall, and now I mean we are seeing cap rate expansion, um, pretty much across the board. I mean, really these rate hikes have done a lot. Anything that was sitting on the market, there's been a pricing adjustment for the most part, just based on debt markets. However, it's funny you bring that up. It seems as if the multifamily market was phenomenally efficient. Like 4 months ago, I would say on a podcast, I'd be like, just go buy whatever deal you want because the market is so efficient that yield should be essentially the same thing on any deal you underwrite. Yield is going to be about the same. Now we're seeing something similar. There's no shortage of equity still, but with rates having moved, a lot of guys are on the sidelines, and prices have adjusted, cap rates have adjusted, but not as far as debt has adjusted. And I think, honestly, like we were talking about earlier, there's always, I don't want to say like a chump, but a guy who maybe isn't as well as informed as he needs to be. So there's a lot of money going out still that I think is keeping those rates a little more compressed against interest rates. But I think that's a short term. I think in a few months, rates will probably expand a little more to adjust to debt. And I mean, what do I know, right? The spread above interest rates doesn't necessarily have to exist in multi, right? You can be flat with rates, or even as we're seeing right now, like a point and a half below. Again, it just comes back to business plan, right? If we think we can bring a NOI yield up to 6.5, 7 by year 3, that model still works, even with a 4.8 fixed rate, right? So we're seeing a lot more emphasis, not so much on the year 1 as that year 3 and 4, because that's what it takes, I guess, in this interest rate environment. You've got to have a very strong business plan after that first year.
Wow, that was awesome. Thank you for that insight. I really appreciate that. Very well said. Definitely something to keep an eye on. But again, like you said, just everything looks looks strong, right? There's not, there might be a waiver and kind of a, cap rates expand, but the market can absorb that, right? There's not any, I don't see anywhere where it's just like going to come crashing down because of a, 100 basis point expansion. Awesome. Well, that brings us to the final 5. It's the last 5 questions I ask all of my guests. First question, best advice you've gotten from a mentor?
Do something you love, right? The old, you won't work a day in your life if you're doing something that you love. And again, that came late for me, right? Like you, I've got a passion for real estate. I have a ton of fun doing it. I've met a lot of great people. It's been very good for me and my family. So yeah, do something you love.
I love that. Couldn't agree more. What is it about your career that makes you feel like you're fulfilling your why?
Yeah, so our company's motto is kind of twofold. One of them is elevate humanity, and what we're doing, right? Fee management does not make a lot of money. But we're with a couple different things we're doing, we're actually enabling better lives for people, both our residents and our employees. So everyone we serve, and obviously investors, right? So we want to elevate humanity. We've done a lot of great things for people through this company, and we want to continue to do so. So really, what gets me going is, the ResProp side of our business really isn't designed to make millions and millions of dollars like the investment company or like the tech company. It's really designed to create a better mousetrap that better serves humanity, and that's what we always lead with. So that's kind of what keeps me going is the actual benevolence that you're able to have in real estate. It's the same as you, right? Like, you're dealing with people who are investing their savings. Like, you're elevating someone's life doing that, and that's just a really cool thing about real estate is we're creating a new avenue for people.
Absolutely, couldn't agree more. Favorite non-real estate or investment related book?
The Little Prince. If you've heard of it, it's I think it's the most sold book of all time, behind the IKEA catalog and the Bible. The French guy wrote it. It's a children's book, but it's very profound. And essentially, the thesis is it's the value of relationships, but also don't take life too seriously. We have to be adults, right? But we don't have to act like adults in everything we do. So, still finding joy. We closed the deal down in Sarasota. This was a year ago. And we were at the Ritz-Carlton doing our celebration dinner, and I got the investors and everyone to go look for shark teeth on the beach with me at 11 o'clock at night. And so I was splashing around in the water with all these guys who were, 4 hours earlier sitting in the conference room in suits. And so you get to see the true person when you're dealing more on that one-on-one level. We had a ton of fun. So really always just seeing the child in everyone, seeing the friend in everyone, comes out in that book. So it's just done a lot for me. And hey, I don't want to talk about just business. I want to see how you're doing, right?
Absolutely. I love that. That's awesome. If you could have any superpower, what would it be?
Time travel, definitely.
Nice. Didn't even skip a beat there. I love that.
I'd be the Bitcoin king.
Yeah, that'd be nice. And then move to Puerto Rico and not pay capital gains tax.
That's right. That's right.
Awesome. Last one. Best way for people to get a hold of you and learn more.
Yeah, so I'm on LinkedIn, LUKELEINS, and my email is LLEINS@ResProp, ResProp management.com.
Cool. We'll link that in the show notes. Luke, can't thank you enough for your time. Really appreciate it.
Hey, Johnny, appreciate it, man.
Absolutely. Hey guys, thank you so much for watching today's episode. I hope you really enjoyed it. Listen, I know it's cliche and you hear it all the time, but please don't forget to like and subscribe to the channel so you know when the next video is coming out. Even though this is technically a daily podcast, you know it's coming out the next day. We have a ton of content coming your way. So please like and subscribe. It helps a ton. Leave comments. Would love to know what you guys think. And we will see you on the next one. Thanks so much.